Good morning, afternoon, and evening traders, wherever you're logging in from. I hope you all had a fantastic week so far in the previous week of week 46, and now you're ready to rock and roll going into week 47. So first off, whenever we're going into any of the weeks ahead of us, I always want to see what big stuff is going on that week. That way we're not taken by surprise by anything, right? So the first thing is obviously news. What news is going on going into the week ahead of us? And if we look at the news ahead, we have a few things. There's nothing going on the later today, which is Sunday, the time I'm recording this, but we do have the next news announcement on Monday for the U.S. It's the Empire State Manufacturing Indexes, and then at 2 p.m. on Monday, we also have FOMC member Clarita speaking. Tentatively on Tuesday, we have OPEC JMMC meetings going on, and then at 8:30, we've got the big one for the week, which is going to be the core retail sales month over month. That forecast is 0.6%. The previous was 1.5%. We also have the retail sales, which is another big one. That's going to be a previous of 1.9%. and a forecast of 0.5%. We also have import prices coming out at 8:30, but those are medium. And compared to the core retail sales and retail sales numbers, the rest of the stuff isn't going to make a huge deal, honestly. But we do have some 9:15 news, capacity utilization rates, and industrial productions, and then 10 o'clock business inventories and NAHB housing market indexes, as well as the 4 p.m. tick long-term purchases. And that's all for Tuesday. Wednesday's a little bit lighter. We have the building permits and housing starts at 8:30. 10:30 is, of course, crude oil inventories. And then at 12:15, we have FOMC member Williams speaking. Going into Thursday, 8:30, Philly Fed Manufacturing Index. That's a pretty big announcement that can move things for sure. The forecast for that is 22. The previous was 32.3. We also have the unemployment claims, another pretty big number. 707,000 is the forecast. The previous was 709,000. Also on Thursday at 10 o'clock, we have the CB leading indexes month over month. That's forecasted at 0.7%, which is also what the previous was. And the existing home sales, 6.45 million. And what a mess with your brain that one is. The previous is 6.54 million. I apologize to anyone who suffers from dyslexia on that one. That one almost threw me for a loop. Natural gas storage coming out at 10:30 on Thursday. The previous is 8 billion on that one. On Friday, going into the 20th, we have FOMC member Kaplan speaking at 8:30, and then the G20 meetings going into Saturday. And that's about it. So the news calendar, we don't have a huge amount of news going on, but we do have some news going on Tuesday as well as Thursday. The rest of the week is kind of calm and quiet, all things considered. Another big thing to check would be holidays or anything that might shut the markets down this week, and we don't have anything, which is always nice. We did have Veterans Day last week, and then not this coming week, but the week after, we'll start moving into Thanksgiving and all of that fun stuff. But going into this week, we really don't have a whole lot to worry about as far as news or as far as holidays go that could potentially shut the markets down. At least nothing scheduled, right? So going in and starting off on the NASDAQ, and that's going to be the first one up to the party. Last week, we were looking at how we had that really big jump to the upside. We were gapping above this previous falling resistance. There was a lot of things saying that we could potentially keep going further, and then the market just gave it all back up, right back down again. Obviously, the wedge or the channel lows, they just got a little bit more defined. They're still there for sure. And now this falling resistance, that's sort of the next line in the sand. The big thing that I want to see for the NASDAQ going into this week, now that we've broken back underneath this larger wedge, and if we zoom out, you can kind of see where that's coming from. There we go. Once we've broken back inside of that, that becomes the hot spot. Are they going to hold that as resistance? There's a lot of other previous structural levels. They've already shown resistance there at 12,100, not to mention just the gigantic psychological level of 12,000. We add to that the uncertainty and everything going on with the world right now, and these indexes are poised for some crazy movement one way or the other, right? Up or down. Right now, the hot spot is going to be the inside of the wedge top. That's going to be a zone of resistance. And if the market does start trending above that falling resistance, then they have a chance to start making a back up towards the channel highs. From a cyclical standpoint, though, we did have the upward move, the nice pullback, right? And that did create the higher low and lower high wedge that we're stuck in. But now we've got that higher high, and this is the chance for buyers to try to get this trend going to the upside. It's doubtable, at least from a sustainability standpoint, that the channel is going to look this aggressively steep, because usually when that's the case, they end up falling apart and it goes a little bit more sideways. But it might be along the lines of a wedge that could be forming that might be giving us a breakout a little bit later in time. We don't know quite yet. The way that it's kind of lining up, it's sort of range bound kind of sideways over the past couple days, and we haven't really broken out of this. But again, man, that big spot right there, the inside of the wedge, that's the hot spot that I'm really looking for shorts to try to push it down. And if the buyers are successfully able to break above that, then it's breakout pullback time all the way back up towards the top of that top of the channel as resistance and a target area. Next up, we've got the S&P, and it's a little bit of a different viewpoint. It feels like the S&P and the NASDAQ are kind of playing catch up with one another. One is leading and the other's kind of lagging behind, and then they kind of flip gears and the other one's in front and the other one's lagging behind. So if we look at the drawings that we had from last week, we had some nice channeling to the upside in the same wedge. Everything was very similar. But the S&P blew off the top of that channel and finally started jerking back. But the thing is, that's much more significant than what we saw in the NASDAQ. This gives us a really strong breakout, but there wasn't a failure like we saw in the NASDAQ. They're actually holding it as a level of support right now as kind of a double bottom-ish. It's not the prettiest double bottom in the world. But one big thing that stands out here, if we zoom in, they filled the gap. And that gap closure and support coming off of it, especially secondary support with another test, that's huge. And now that we're breaking above highs again with some serious bull bars to the upside, it really seems like buyers are still looking for the upswing here. And that would line up pretty well with what we were looking at the NASDAQ as well. I'm expecting a break higher to get to the wedge or channel highs. On the NASDAQ, in this case for the S&P, expecting it to go a little bit further towards 3600s, 3610s. Those are the high closes and high areas of resistance that a lot of traders will be taking profit in at the very least, and potentially some shorts trying to build into that too. Now, we do also have the potential wedge high that we're coming into now that we've got that new swing that they gave us at 3650. There's not really that good a one from the bottom. The only one that kind of stands out would be something along the lines of this, or even really, really shallow like that. That's about it. And those are still not exactly the best structural things in the world, so I don't want to make them too big. We'll keep those a little bit more zoomed out. It's just kind of zones of interest if the market pulls back to it. But realistically, right now, the big thing that I'm looking for is more continuation to the upside from the S&P, and it makes a lot of sense that we'll see more bullish continuation. We haven't quite hit the open yet. At the time I'm recording this, it's 5:25. The market doesn't open for another 35 minutes. So where the open is going to play a big factor. But right now, buyers are looking for continuation up towards that 3610 area. And if they start getting a little bit pushed down here, we're going to run into those zones of support. The problem is if they break through those zones of support. If they start cracking down to the 3450s, it's a wide open door. There's nothing left to hold the market up anymore. And that could become a very large problem for buyers if they are, potentially stuck long. So be careful if it starts cracking down, but the upside right now looks pretty good for a bit more continuation, as long as they don't fall off the cliff. Oh boy, and then there's gold. What a chart. Man, all in one candle, just all 1 4-hour candle, just straight down to the bottom of the channel. And now we're finding some support down here. Obviously, this was a monstrous move to the downside. They fell off 1960 all the way down to 1860, a straight $100 drop. And now we're finding a bit of support down here. Whenever we've got these gigantic candles, they create barriers. There's zones of interest that we're going to have to break through. Not just the highs and lows, but several of those areas. So in this case, the high of it is also the open. That's kind of a twofer. 1959.8, and then the base of that big bear bar, which is at 1856. That price tag is right in the wrong spot. 56.7. So that is going to be the major zone of interest. And you can subdivide this even further by looking at the halfway points. But because this bar is basically a big brick, the wicks and the closes They're not very far from one another. So really, in terms of the difference in area, you're talking 1861.6 to 56 point. I mean, they're close enough. You could line them up and that might create a nice little pocket of interest, which is what the buyers may have used before. The big thing that we really have to see now is this is obviously a range, and if we zoom out from the bigger picture, the bulls own the trend. It's hard to say that they don't, and if we're looking at the upside continuation here, it won't let me draw the low correctly. Let me just use the drawing tool. If we draw it like this, we can see that there's an obvious breakdown point. And with this reach higher and such a strong drive down, man, that's a little bit suspect. You know, you can feel the buyers who are in long here, they're in long here, they're in long here. We've got this wedge, we're coming into rising support. Everything in the world is lining up, and then it fails. Right? I mean, nobody's going to be too pumped about that. Now, the one big caveat that the buyers have is when it did break down, the breakdown didn't follow through. It kind of got stuck and bounced right back up again. And when the market, even though that was one candle, when it came back, it found support again. So there's obviously something going on here around that zone, 1860s or so. And logically, if we look backward, we can see there's a huge amount of structural support, even if it does break through that a little bit. So the zone of support that buyers have down here is very large, but that creates a problem, at least for shorter term traders, because that's going to create a large area that a lot of traders are going to be able to buy and sell inside of. So we're talking huge ranges here, $100 candles on gold. But realistically, the market's not going to be like that at all times. So it kind of appears as though we're creating a little bit of a bear pennant. Maybe the sellers try to rotate down one more time. That would be the likely scenario, down towards those 1850s, 1855s. That's where the buyers are going to have a chance to step up and shove the market back to the upside. If it continues grinding higher and the sellers fail and fail and fail, we're almost guaranteed, there's never a guarantee in the markets, but almost, that they're gunning up towards the highs of that big giant candle at 1960, and that's going to be the big point of interest for buyers and sellers. Buyers taking profits, sellers coming in, new sellers coming in, a whole mess of stuff happening up there, so be careful. But right now, we're kind of on the tipping point. If the sellers can't take this lower, it's going to be game over and probably a grind all the way back up. Then shifting gears over to crude oil, and what a volatile week crude oil has had. Big giant two legs to the upside, very nice two legs to the upside as well. So with that continuation to the upside, obviously we measured out almost perfectly. So with a perfect measured move to the upside, even if we do get a third leg up, realistically, we just can't expect that much out of it. It's more likely if the market is going to pull back, we've broken above the wedge top after failing below the lows, all of the jobs are completed, it would make a lot of sense to see buyers wanting to step back towards where they were kind of stuck, at least shorts in this case, stuck, looking to become buyers. On the pullback zone, back towards 39. It's a big zone of interest, a lot of structural support down there, not only the lows, but also inside of those lows. There's a lot of interest, and we've come back and sort of reconfirmed that area of interest around 37.50. So realistically, if the market's going to pull back, the biggest zone of interest for longs are going to be in those 37.50s, sub 38s, and I mean, all the way down to like 36.50. It's got some decent wiggle room. I mean, buyers will be buying all the way down here, and the lower they can get in, the lower the risk. But the upside objectives still remain very, very large for now. We've only got two legs to the upside. Buyers are going to be trying to get that third. We are starting to see the MACD crossing down. Things are starting to get a little bit overweight here, especially now breaking inside the wedge top. Makes it a little bit more difficult. Buyers are going to have a hard time because now they're going to have to work through that. But there are a few things that really stand out with that breakout to the downside, really strong continuation to the upside. And even if we mark this up as it was kind of a possible channel, we're coming into the channel lows. So everything is lining up really nicely for this to start rotating back up again. It's just a matter of seeing when the buyers want to show, because right now we've just got three lower highs and there's not really a whole lot of proof. Likely, big objective, a lot of sellers are stuck down at those sub 40s, 39.50s, 39.70s. That's going to be the point of interest where those shorts can get out and the buyers can start returning back to the party to try to push the market back up again. Shifting gears over now to the euro, and the euro has a little bit of sideways action. It's not really getting a whole lot of movement up or down. To be realistic, if we zoom out a little bit, it hasn't really done much since July. It's been very, very range bound, and it's kind of understandable. There's a lot of questions going on in the global economic side of things, and with all of those questions, nobody really wants to step up to the plate quite yet. It does seem as though every time we start dipping down into the 1.17s, 1.16.5s, buyers seem to be interested. There's a lot of interest driving down there. So as long as we continue seeing these higher highs and generally speaking, other than that really quick little trap, higher lows and good bullish momentum to the upside, we have every reason to believe that buyers are trying to get the move up. The big problem that they've got is obviously the zone of resistance hovering at around 1925 or so. Lots and lots of resistance up here, and it's definitely creating a bit of a problem. Buyers are having a heck of a time getting through it. They have several times previously, and now that we've come back, we're stuck again. It does seem like we've got a possible 3-press low, and buyers are trying to rotate back up, but you can definitely see how early this is to the party. They still have to get through this brick wall here at 18450. So as long as buyers are still kind of trying but not really doing anything successfully, then sellers have the upper edge. If the buyers can start breaking above this, getting above 19s, getting above these 195s, right, getting some of that extra proof, then buyers will definitely be looking to buy into the pullback for that continuation. Everything is lining up really nicely for a potential push, right? 3-press lows, possibility of a divergent bottom, especially on the nearer term. And, again, it's looking good for the push. It just has to show up. We've got to get through this wall. And if we can get through here, then the buyers have another shot at ramping up towards that 1.2, that big giant level that's just, man, is that thing just waiting to come back to it. Big gravity sitting on that 1.2 level, and it wouldn't be a surprise at all seeing the market flush right back up towards it going into this week. And then over on Bitcoin. Bitcoin continues to ramp to the upside with they blew off through the 14,500s, ramped up into the 15s, and barely even stayed in the 15s before they poked into the 16,000s. Very nice pullback towards 14,500, ramp back up, kind of wedged a little bit. Right? Nice little wedge, and buyers trying to break out of that wedge as we speak, going into the 16,100s, 16,200s, making it all the way up to 16,500s, creating a bit of a flag here. And the one big thing that stands out is this possible wedge that we're forming at the top. I'm not loving the fact that we're seeing some bearish divergence up here on the MACD. That certainly doesn't help. Even if the market does make a new high, it's going to have to invalidate all of that divergence, get through all of that weakness to continue back up. So it's becoming difficult to want to be a buyer up here in the 16,000s. There's too much in the way. There's so much stuff going against the long side right now that although I am definitely pretty much a perma bull when it comes to Bitcoin, man, is it tough to want to be a buyer up here. I think realistically, if I wanted to look for longs or reattempts at the longs, sure, there's going to be some opportunities in the near term, probably this week, going back up towards the highs. There's bullishness, right? Buyers are buying every pullback. Look at all the wicks down. Every pullback is getting bought. So we are going into some strong bullishness, and by no means am I saying that it's done. The problem is there's just not a whole lot of room to keep going, right? So if the market is going to go up here from 15,900, it's got room up to like 16,500, and that's about it. That's still a pretty good move, right? Don't get me wrong. But, there's a lot more room if we can get that pullback down to the channel lows. Heck, even at this point, just a midline, something that's just a little bit cheaper down here to buy into. Because right now, as it stands, it's just a little too far up for my liking. There's too many red flags for me to want to do anything but wait or potentially look for, maybe a couple day long into this week or a better pullback down towards areas of support, 15,500s, preferably even cheaper, 14,000. Now we're talking. All right, well, that's going to do it for the weekly brief for week 47. As we always say, stay safe out there, keep those stops in play, let the winners run. I hope you have a fantastic week ahead of you, and I look forward to seeing you guys in the live streams. If you're not in the live streams already, don't forget you can always join those on the YouTube members page or right on the main page of ssftg.com. Have a great week, and we will see you all in week 48. Thanks.